Before we start the actual content of this presentation, you should know that this video has been recorded for use in more than one class. As a result, there may be some things in this video that do not apply to the specific class that you are taking. Please just consider that an added bonus at no extra charge. This particular presentation will show how to calculate additional funds needed using the financial statement method. I should also add that the formats have been pre-entered into this video to save time on the video. You most likely won't have that luxury if you are doing this in the real world. So let's get started. As I say in all of my videos, the uses and workings of these tools and principles are explained in your textbook or on the web. These videos are just to show how to calculate the numbers and to show in what format the numbers are usually presented. Like the prior video that covered additional funds needed and the self-supporting growth rate, this video is using the same company data. What was provided before was a simplified balance sheet, an abbreviated income statement, and one piece of additional data that was needed. On this example, all the same numbers are in a vertical format to the left of your screen. One interesting thing to note up front, and which will be repeated at the end, is that if the same numbers are being used, the result should be the same. In the last video, the result for additional funds needed was $15, or $15,000, or $15 million. This video is using the shortened numbers to keep the screen size needed under control. The one factor in the third column that has been pre-input is that the company expects to grow by 22%. As before, the company also does not expect to issue long-term debt or to sell stock in order to do so. The other point for this exercise is that the ratios for all the assets and accounts payable and accruals compared to sales should remain the same. As before, the point of this exercise is to calculate how much short-term borrowing would be needed to achieve the expected growth. The first step in this process is to calculate the category to sales ratios for all of the assets, the accounts payable, and the accruals. Each of these percentages will be used to project to the end of the year balances for the end of the coming year. Highlight the workbook cell directly under Factors. Type in an equals sign. Highlight the 350 in the cell to the left. Type in a slash denoting division. Highlight the 1020 next to sales and press Enter. Highlight the workbook cell directly under the 34.3%. Type in an equals sign. Highlight the 177 in the cell to the left. Type in a slash denoting division, highlight the 1020 next to sales, and press Enter. Highlight the workbook cell directly under the 17.4%. Type in an equals sign, highlight the 69 in the cell to the left, type in a slash denoting division, highlight the 1020 next to sales, and press Enter. Highlight the workbook cell 2 lines down from the 6.8%, type in an equals sign, highlight the 145 in the cell to the left, type in a slash denoting division, highlight the 1020 next to sales, and press Enter. Highlight the workbook cell 3 lines down from the 14.2%, type in an equals sign, highlight the 101 in the cell to the left, type in a slash denoting division, highlight the 1020 next to sales, and press Enter. Highlight the workbook cell 2 lines down from the 9.9%, type in an equals sign, highlight the 76 in the cell to the left, type in a slash denoting division, highlight the 1020 next to sales, and press Enter. Please note that the formula that has been used for each of these factors is listed to the right of the factor. The same is true in the income statement section at the bottom of the page. Highlight the workbook cell directly below the 22%, type in an equals sign, highlight the 102 in the cell to the left, type in a slash denoting division, highlight the 1020 next to sales and press enter. Highlight the workbook cell directly below the 10%, type in an equals sign, highlight the 13 in the cell to the left, type in a slash denoting division, highlight the 102 next to net income, and press enter. The next set of steps really needs to be done in the same order that is being shown here on the video. With minor exceptions, getting out of order will result in problems in arriving at the correct answer. It's also very important to be very detailed in this analysis. Even though some are challenged in the area of detailedness, this just won't work without attention to detail. One other thing to remember is that even though the assignment just calls for a balance sheet, it is not possible to complete this analysis without the abbreviated income statement. Trying to skip that step will also lead to problems. Highlight the workbook cell to the right of Factor times current year sales in the forecast for coming year column. Type in an equals sign, highlight the 1020 to the left, type in an asterisk denoting multiplication, type in an open parenthesis followed by a 1 plus, highlight the 22% also to the left, type in a close parenthesis, and press enter. Highlight the workbook cell directly below the 1244, type in an equals sign, highlight the 1244 in the workbook cell above, type in an asterisk denoting multiplication, highlight the 10% to the left, and press enter. Highlight the workbook cell directly below the 124. Type in an equals sign, highlight the 124 in the workbook cell above, type in an asterisk denoting multiplication, highlight the 12.7 to the left, and press enter. Finally, for the income statement, highlight the workbook cell directly below the 16, type in an equals sign, highlight the 124 just above, type in a minus, highlight the 16 just above, and press enter. This 109 is a critical component of the balance sheet and the reason that the income statement is necessary for this analysis. The next section to work on is the assets. Highlight the workbook cell directly under Forecast for Coming Year. Type in an equals sign, highlight the 34.3% to the left, type in an asterisk denoting multiplication, highlight the 1244 to the right of sales, and press enter. Highlight the workbook cell directly under 427, type in an equals sign, highlight the 17.4% to the left, type in an asterisk denoting multiplication, highlight the 1244 to the right of sales, and press enter. Highlight the workbook cell directly under the 216, type in an equals sign, highlight the 6.8% to the left, type in an asterisk denoting multiplication, highlight the 1244 to the right of sales, and press enter. Highlight the workbook cell directly under 84, type in an equals followed by SUM and an open parenthesis. Highlight the 3 workbook cells above, type in a close parenthesis, and press enter. Highlight the workbook cell directly under 727, type in an equals sign, highlight the 14.2% to the left, type in an asterisk denoting multiplication, highlight the 1244 to the right of sales, and press enter. Highlight the workbook cell directly under 177, type in an equals sign, followed by SUM and an open parenthesis. Highlight the 2 workbook cells above, type in a close parenthesis, and press enter. The total assets have been calculated as 904. Remember the accounting equation where total assets must equal total liabilities plus equity. On that basis, highlight the workbook cell in the Forecast for Coming Year column to the right of total liabilities and equity. Type in an equals sign, highlight the 904, and press enter. At this point in the process, the cells are calculated from the bottom going up. Highlight the workbook cell directly above the lower 904. Type in an equals sign. Highlight the 219 next to retained earnings. Type in a plus. Highlight the 109 at the bottom of this column and press Enter. Highlight the workbook cell directly above the 328. Type in an equals sign. Highlight the 120 to the left and press Enter. Remember that there was to be no new stock or long-term debt issued, so common stock remains the same. Highlight the workbook cell directly above the 120, type in an equals sign. Highlight the 904 3 lines below, type in a minus. Highlight the 328 2 lines below, type in a minus. Highlight the 120 just below and press Enter. Remember from basic accounting that liabilities plus equity equals total assets. That translates to total liabilities plus equity less equity equals total liabilities. In the case of this simplified balance sheet, there is no long-term debt. If there were, extra steps would be added to calculate just the current liabilities before the next step happens, and there would be a total liabilities line too. Moving on, highlight the workbook cell directly above the 456. Type in an equals sign. Highlight the 7.5% to the left. Type in an asterisk to denote multiplication. Highlight the 1,244 further down the column and press Enter. Next, highlight the workbook cell in this same column, but on the accounts payable line. Type in an equals sign. Highlight the 9.9% to the left. Type in an asterisk to denote multiplication. Highlight the 1244 further down the column and press Enter. Finally, there is only one number left to enter, and it is the leftover after subtracting the accounts payable and the accruals from the total liabilities. Highlight the workbook cell between the 123 and the 93. Type in an equals sign. Highlight the 456 2 rows down. Type in a minus. Highlight the 93 directly below. Type in a minus. Highlight the 123 just above and press Enter. While the answer in this workbook cell is 241, the bottom line is that is 15 more than the prior notes payable of 225. That 15 is the additional funds needed, or AFN. And funny thing, using the same numbers as were used in the prior video, the answer is the same. It's 15, or 15,000, or 15 million. This method is more complicated than the formula method, but allows more variation in how things will actually work in real life.